the screen?
Yep, I can see. Just my I'll get my camera on in just a second. I just gotta handle something before from that standpoint.
Okay, I just want to make sure you can see because we're gonna Rita's gonna share her screen here.
Sure am.
Yeah.
All right. I don't know what letter you want to start with, Leslie.
That's fine.
Okay.
Master comment letter's fine. So first up, before we get started, I just want to say that this audit went the best it's ever been. It's ever went. Patty was really great at getting us everything. She had a lot of stuff ahead of the audit for us, and then was very responsive the whole time, you know, when we needed something. So I really appreciate that and your hard work. So thank you.
You're welcome. Thank you. I agree. It was probably the easiest one to do. So
Great.
we can do that again next year, Rita.
Yeah.
I think the big thing was getting those single audit files. So when we got there on site, everything was waiting for us.
Mm-hmm. That was
Right.
great.
We did a detailed needs letter that Rita put together, and so I think that helped too.
Mm-hmm.
Although it probably looked intimidating when you saw it.
Mm-hmm.
Okay. So the management comment letter, the only thing we had in here, I want to go down, Rita, is a discussion of the lease standard that's coming up. And that will be not for this year that we're in, but the next year. So what that does is for any operating leases, we now have to recognize it. We have to recognize an asset and a corresponding liability. It's like a right to use asset and then a liability that goes with it. And it's being treated similarly to what capital leases, you know, if you bought equipment over, you know, installment purchase lease or something like that. So it just means looking at your material leases. If they're immaterial, I don't think we want to do anything with them, you know. So looking at your material leases, which, you know, would primarily be your office lease. But we'll need to look at, you know, each one and make a determination of whether we're going to implement a standard on that. So that was the only thing in the comment letter that we had. So we didn't have any issues with any of the receipts or disbursements or any of the walkthroughs that we did, or any of the testing that we did. So from that aspect, a positive audit result. Then we have the communication with those charged with governance at the conclusion of the audit. And in here we have the adoption of new accounting standards for revenue. One being revenue from contracts with customers, and the other one, contributions received and contributions made. So the first one really talks about, when you say contracts with customers, it would be like where you're receiving and giving commensurate value. So things like contracts where you have to perform in order to get the money. You would have to make sure that you've satisfied any of your performance obligations. And then with contributions received and contributions made, that one is when you get contributions, and this is about commensurate value. So for instance, with a grant, if the government, say you have a government grant, if the government is not receiving commensurate value, then it's treated, it's not treated as a contribution, it's treated as a contract. And then once you determine if it is a contribution, you have to determine whether there are conditions that need to be met before you can recognize the revenue. These really didn't affect your revenue streams because with your grants, you don't recognize the revenue until you actually incur qualifying expenditures. And then with your contracts, you recognize the revenue when you perform the services. And so that really didn't change from the way you've been recognizing revenue. Then the section goes on and talks about accounting estimates. So the most sensitive estimates are the allocation of functional expenses, because it requires allocating, based on time or space or, whatever method that you're using. And then compensated absences, which is based on your current rates of compensation times your leave balances. And then disclosures that we want to point your attention to are the disclosures of grants receivable and unearned grant revenue, and also net assets. And Rita will go through those when we look at the financial statements. We had no difficulties in performing the audit. Corrected, non-corrected misstatements. You want to jump to that, Rita? Every year, it's like a non-audit service, really. We do adjustments for your grant receivables and your unearned grant revenue. And so we made that adjustment. And then we also brought your compensated absences up to the correct balance. So that's something we've been doing every year. So if we go back,
Leslie,
yes.
Rita, is that something that we should make sure we do before you get here for the audit, or is it best to leave it?
I mean, it would be nice if you did it before the audit. Rita could share the work paper that we use.
I think I did this year. I think I sent it to Patty.
Yeah, I think we did. Yeah, you did go over it.
And I think I walked her through how to do it.
Okay. Good. So even if, if we got it done, and even if you had to modify it slightly, then we wouldn't have such big adjustments.
Yeah, exactly. Or if even you gave the entry, like if she didn't have it done right away.
Yeah.
And
Yeah.
she gave us the entry.
Well,
Yeah.
and there's no reason why we couldn't, before we come in to do the audit, just get together with you, Patty. Rita could get together with you and just walk you through it.
Yeah. And we could also have an audit committee meeting then too.
Yeah, that would be good.
Yeah.
Yeah.
So thank you.
Yeah.
So in terms of having all the data that we need put in GMS to make that and do those calculations, is that something as soon as we close out June? Or would we need to kind of let the cycle go through and maybe wait till like the end of July or early August to kind of clear it all out and do it then? What would be the timing, the best timing on that?
I'm not sure from your point of view, Patty, do you have an opinion on that?
Well, we'd have to close out June before we could do it.
Right. Oh, yeah.
So
Oh, yeah.
I would say after we close out June and close out the year.
Because I just use the revenue and expenses by project to do that.
All right, so we can book that then. So as far as having an audit committee then and doing those calculations, we could book that for, July or maybe even August. Then because we close out June and the year by the end of July, correct, with our last report. So by the end of July or early August, we could do it.
Okay.
And then I think that's something that then we have to reverse, if I understand it correctly, because it's not something New York State wants to see. Is that right, Rita and Leslie?
Well, based on what you've been working with the state on, I think that's probably true.
Yeah. So that's something we would need to book as of June 30th. And then when we get into our next year, Patty, we have to reverse it. So that's probably why we've been letting the auditors do it. But but we don't want to have that big an audit adjustment if we don't have to.
So then we want to do that and do those calculations then before we actually formally close out the year
Right.
in.
Yeah.
Okay.
And then reverse it in the new year. It's one of those weird things. It's really only for the audited financial statements, but if the auditors do it, then it's an audit adjustment, and we don't want those if we don't have to have them.
Right.
So,
Just as long as you can get your reports that you have to give to DOL or to,
Yeah.
correctly.
Mhm.
If they want to see them. Okay, so back to the communication letter. No disagreements with management. Management representations. We did get a letter from management before we issued the report that basically tells us that we have everything we need to do the audit. There's nothing that you haven't disclosed to us that would affect our audit opinion. You've got title to all your assets, that kind of thing. Consultations with other independent accountants is really talking about opinion shopping, and there was nothing like that. No other audit findings or issues. And then this last, this paragraph is talking about our responsibility for the CFA, the Scheduled Expenditures of Federal Awards, which accompany the financial statements, and that we look at it in terms of the financial statements themselves in relation to the financial statements. So any questions about the comment letter or the communication letter?
nope.
Then I'm going to turn it over to Rita.
Thanks. So the financial report, we have the table of contents, and then we have the independent auditor's report that just states the responsibilities of management and us as the auditors in compliance with the government auditing standards. And this is the main paragraph you care about, the opinion, where we issue an unmodified opinion saying everything was presented fairly in all material respects and you're good to go. There's a discussion again around the CFA, which there's another letter in the back of the report that actually talks about the internal controls over the financials in accordance with the government auditing standards. So then we get into the actual numbers in the statement. So first we have the statement of financial position.
Can I just interrupt for a minute, Rita? Sorry. Can everybody see that, or do we need to blow it up a little bit?
I'm good.
Okay.
So your total assets increased around $234,000 from 2019. And that's really due to the significant increase in grants that were awarded and received during the year, and due to receiving the PPP loan. So that PPP is $125,000 is sitting in cash. And your grants receivable, that's part of that adjustment we did. Just means that you've expended money for these grants that were awarded. You just haven't received the funding for it yet. Your total liabilities also increased approximately $196,000. And that's a good chunk of that is related to that refundable advance of the Paycheck Protection Program. So that's the amount that you have not expended yet from the total. And again, the unearned grant revenue goes along with the grants receivable. And then your net assets increased $39,000 due to the result of operations and what has happened with the loans and your expenses. Then we have the statement of activities. So grant income did increase significantly during the year. And it's really the WIA dislocated workers and the Trade and Economic Transition National Dislocated Worker Grant. Those both increased significantly from the prior year. So that's where a lot of your grant income increase came from. Again, you have that Paycheck Protection Program. So this is the amount that you recognize, because that's what you actually expended, that was expended during the year. So in total, your revenues increased approximately $373,000. And your total expenses also increased approximately $307,000. We're going to take a look at those on the next page, the functional expenses.
So basically, I mean, so the grants, really your grant, as your grant revenue goes up, your expenses go up because you have to have the qualifying expenditure. So the only way you can increase your net assets is with the other types of income. So the PPP really did help
Yes.
increase your net assets this year. And before we go too much further, talk about the PPP. Patty and I were just talking. I know you've been trying to get a hold of Chemung Canal.
Right. I reached out to them last week, and I just reached out to them after you and I had our conversation today to start the ball rolling so that we could start the repayment process. And she hasn't gotten back to me yet.
And the forgiveness, the application
Right.
for forgiveness, right?
So we didn't spend it all? Is that it?
No,
No,
we didn't spend it all because we could have spent we could have spent it all, but the WIOA money, because we did get those grants in eventually, they're not qualifying expenses under the PPP. So
Yeah.
we have to get that back.
I get that. What we did here was we just got the net of our grants, but that's good because that's a 1% loan, which we couldn't get any other way. So that's great. That's
And
still great.
I figured we're going to pay back about 25,000, which is not horrible.
Yeah,
I
that's
think
not bad
that's,
at all.
Mhm.
That's great. That's really good, actually.
Mhm.
So, very good.
So, excuse me, the statement of functional expenses, try to fit most of it on the page. So just a couple key ones that significantly increased. Your salaries did increase approximately $42,000. And that's really just due to rates increasing during the year. Your contracted training services increased during the year approximately $112,000, and that was really because you had more participants active in the training programs that you were running, so you just had more costs associated with it. Tuition and incidentals increased approximately $104,000, and again, that's due to more participants actually participating in the program and an increase in rates. And your on-the-job training increased approximately $48,000 due to more companies actually offering on-the-job training and taking part in it. So you had more expenses related to that. And we do have the 19 functional expenses, so you can compare it. Whole thing is comparative. And then you get to the state.
If we're going to start doing the board meetings, we should put together, at least for next year, an executive summary.
Yes, this is all
so
condensed.
We can have it so that we can have everything on one page and look at several years in relation to each other.
And statement of cash flows, everything is operating, which it's just pretty much our changes on the balance sheet. It's really all that sits there. So that's it for the statements. Are there any questions before we get into the notes? All right. So for the footnotes, note 1 hardly ever changes. It's the summary of significant accounting policies, describes the entity, the accounting method, the basis of presentation, cash and cash equivalents, the use of estimates, the tax exemption, the revenue recognition, which we talked about earlier, compensated absences, functional expenses again. There is a evaluation of subsequent events. And then this is where we put the new accounting pronouncements, just as mentioned in the communication letters, the revenues. And then, so note 2 is your operating lease for the office, your office space. And this ties out to your expenses. Then you have the pension plan, the defined contribution plan that you're part of, and the expenses related for 2019 and 2020. So note 4, note 5 are grants receivable and unearned grant revenue, which I discussed in the balance sheet, but this is the actual breakout of the grants. You can see who's not paying you or who's paid you and you haven't spent the money yet. Note 6 is that the PPP loan that we discussed and where it's recorded. And we keep note 7 as a disallowed cost because there's always a chance that something could get disallowed. It's usually very minimal amounts.
Thankfully, we've gone through our rough patch.
Yes. Again, with the compensated absences, the actual amount, your liquidity. So your total financial assets available within 1 year, that looks very high. A lot of that is because of the PPP sitting in cash, along with your significant increase in grants revenue and grants receivable.
So you have to look, when you really evaluate this, you have to look at what your current liabilities are too,
Yes.
which for you, they're pretty much all current, so.
Note 11 was the other significant sensitive note around the net assets. So you went from a net deficit of $388 to a net position of $38,000, which is great. And again, as Leslie mentioned, it's really, a lot of it is due to the payroll protection program receiving that money. And then note 12, it's going to be in here for a long time. The economic uncertainty due to COVID-19. So that's just standard language. It was in the report last year. So then we get to the independent auditor's report on internal control over the financial reporting and compliance in accordance with government auditing standards that I had mentioned. This letter just describes a deficiency in internal control, a significant deficiency, and a material weakness.
Which we didn't have any.
No, we did not. Also talks about the compliance because of government auditing standards. Then we get into the independent auditor's report on compliance for each major program and internal control over the compliance required by uniform guidance. And just like the other letters, this states the management's responsibility and auditor's responsibility. Again, it's a clean opinion. And again, it describes the deficiencies and material weakness, a significant deficiency. We do have a deficiency in internal control over the compliance, and it's the same one that's been there since 2017, the DOL. So that is part of the schedule of findings and questions cost, and it's considered a significant deficiency.
Can I address that for a minute?
Yes.
So Dan, just so you know, I reached out to Sakna earlier in the week telling her, let's get this ball rolling. We just stopped spending PY19. We have no more PY19 funds available. Let's clean it out so that as of PY19, we're done. I did receive an email back to her telling her that she is strictly UI, telling me that she's strictly UI at this time and will not be able to do that. So I told her, you know, starting PY20, we can do it month by month if there's any discrepancies, but let's get this so it's no longer on an audit. And that was her response to me, that she's strictly UI,
What's UI?
unemployment insurance.
Insurance? Okay.
So when we had the big bump up in unemployment claims and there was all the craziness during COVID, the governor took every single employee from the entire New York State Department of Labor, took them off of their normal duties and assigned them to process UI claims. And they are just beginning to allow some people for a little bit of their time to migrate back to their old positions. But Sakna basically in saying that to Patty is I can't do on this because I'm 100% assigned to processing unemployment insurance claims. So they're still digging out, and to be honest with you, part of the reason they're still digging out is they're trying to tackle some of the fraud cases.
Yeah, I got one of those. Somebody got me.
Me too.
You too?
Have a proposal, and if we do have a
It's
proposal,
rampant.
then John has to.
Yeah, Mel and I get about 10 calls a day from people who are actually desperate because they're retired. They have not ever applied for unemployment in their lives. They've been retired for 20 years.
Yeah.
They don't know who to call. Most of them don't have access to computers. It's quite sad.
Yeah.
So
Yeah.
And
anyway,
now they're starting now that everybody's been unemployed for a year, they have to recertify. So now there's going to be there's going to be a huge push of recertification. So all those people who have not gotten a job in a year are now going to be recertifying with the new rules, and it's going to be a mess for the foreseeable future.
Meanwhile, I talked to Craig Clark yesterday. He called me.
So
Don't want to resolve it.
So this is the CFA, the schedule of expenditures of federal awards.
And he
Um,
asked me.
And it just lists out the expenditures for each program. So in total, the federal expenditures decreased approximately $80,000 from last year. Looking at the schedules. But it just shows what is spent on each program. And then just like the regular financial statement, there's notes to the CFA, the basis of presentation, the basis of accounting, and the indirect cost, and you elect not to use the 10% de minimis indirect cost rate. And then we get to our schedule of findings and questions cost. And this is where you see that there was a significant deficiency identified, but it's not considered a material weakness. And it shows that we tested the WIA cluster as our major program. And then here's our finding that we just discussed. And it goes through everything. And then we have the, like your guys' response, management's response.
So hopefully, you know, if they can get back into it, we can get that resolved.
I would like it to be resolved by June 30th.
Oh, I'm sure you do.
Yeah,
So that's all I got.
Quite the project.
it is quite the project. You're correct.
I don't know where we're at currently, Patty, with the reconciliation. Last I heard, they might have actually owed us a little bit of money. So
They owe us about $800, which is probably why they're not contacting us. It's probably why they don't want to owe us. So maybe we can find an $800 discrepancy to make it zero and everybody will be happy.
There you go.
I'm only kidding.
Just forgive it. Just forgive it, Patty.
nope.
I would.
Nope.
but I'm not gonna say
Nope.
it if I did.
Someone's cutting me a check. I don't care if it's for a quarter. I want a check. 'Cause I'm gonna frame that check. I'm gonna blow it up. I'm gonna mount that sucker.
For pain and suffering, right?
Yes.
Yes.
So. Is there anything else from an audit perspective that Nancy or Drew would need to do a presentation to the board and kind of field questions, or anything important that otherwise they need to know?
No, I think everything's in the report.
Mm-hmm. Everything was, I mean, it was, like we said earlier, it was very, very smooth and easy this year. I'm knocking out all the wood possible.
It was very easy.
And we didn't get a ticket. No tickets on Market Street.
No
Well,
parking
now.
ticket.
They're back. You will now.
Okay. I'll stay home then.
No, what we do is Mel and I both pay for parking, so we leave our parking pass on the table for anybody who comes. If they want to take it and go use the parking garage, they can use our pass.
Okay, remember that, Rita.
Oh, I will.
Yeah.
All right.
So,
Are you?
So
Are you
Nancy or Drew, do you have any additional questions, or do you need some other information, or are you going to be comfortable recommending the board accept this audit? I had to mute, so you'll have to unmute yourself.
No, I'm good from my end. I don't know if Nancy's still on.
Maybe she got tied up.
mhm.
Mine is, I think we'll just take the information and make a quick little one-pager executive summary, not to bore the board with all the details. I think that'll be fine from that standpoint.
We can present the drafts to the board, so everyone has an electronic version of it for their own records and fiduciary.
Well, it's been finalized. The report's finalized.
No, it's not draft, so this is finalized, so.
Yes.
Okay.
Yeah.
Yep. Perfect.
Okay.
Sounds good to me.
So we can shoot for next year to do this earlier, to do it when it's in the draft stage. It would be ideal.
Mhm.
We should, Patty, you should just go ahead and set the meetings, like set the meetings ahead of time, and then that gives us deadlines that we can kind of plug into. So maybe you and Rita get together and kind of agree on some dates, and that way that drives our accountability.
You're
And we
muted.
really, and it would be good to meet with the audit committee before the field work too, to do the planning phase. I think Nancy alluded to that.
So Rita, I'll set up a date and time for you and we'll go through and see what date you want to even actually start the audit.
Okay.
So we'll know then where we can do.
That works.
That'd be great.
Yeah, I think you
we
should
are-
come on site and bring muffins.
I mean, I'll come on site. It was a lot easier.
Okay. All right.
All right.
So Nancy, are you going to be able to join us, or are you, have you kind of had to step away?
I feel like if we hang up, we're going to be hanging up on her.
Well, I can send her a text or something.
Oh, there she is. Maybe
There she is.
there she is.
I had to mute you, Nancy, because you.
Can you unmute her?
No, I can't unmute her. So Nancy, you'll have to unmute yourself. There we go.
Okay.
So we kind of wrapped up here. Are you comfortable with where we're at and to present to the board and kind of close this loop? And Audie
Yeah.
and Rita are going to get together and put together a tentative schedule so the audit committee can meet with them and then we can have this conversation before it's finalized and kind of do a more regimented thing. We're going to kind of map out those meeting dates ahead of time.
Okay. Sounds good.
Okay, well, thanks so much for your time.
Yep.
And again, for all your help during the audit. And I look forward to another year of a successful, wonderful audit.
Thank you.
All right.
Thank you.
Thanks,
Rita, I'll
all.
get in touch.
All right, thanks.
Thank you.
Okay.
Have a good day.
Bye-bye.
Bye-bye.